Hey guys, good evening. It's Simon. Wanted to do a quick trade review. Need to include the disclaimer, obviously, that everything in the video, everything is done in the trade room, in the education room, and all the charts, all of them are for educational purposes. There are no recommended trades in the room, right? If you can lose, obviously, the natural disclaimer is that trading futures is very aggressive. You can lose a lot of money trading futures, and you should consult an investment professional before proceeding to trade futures. Okay, so we got that covered. Um, let's jump into, first of all, we're going to combine tomorrow's preview with today's trade review for two reasons. It's unlikely that I will be here at the open tomorrow morning. I'm not sure what time I will get back, but I do not think I will be here in time to see the open. And secondly, there's some important things structurally that are going on here that are very interesting. So first, let's go to the volume profile chart. And if we look at ES, remember I said that this 2094 and a quarter, get this to respond, this 2094 and a quarter area had become very, very important. If we could get above it, that we should have the ability to give a push to the upside. If we hold below and we can break 2080, then we will be able to make potentially a push to the downside. The key element that was missing here today was the gap. We didn't really gap up or down. We opened right in range. We were unable to get above 2094 and a quarter. Globex High did push above, but during the RTH or regular trading session, we were unable to get above. And then, of course, during the day, we were unable to push really much below 2080 and 3/4. And so we were stuck in balance, and we discussed this morning in the room. It can be frustrating when we're in balance because we just can't get the extension that we're looking for. Technically, this is the 6-day imbalance, and we're still building energy for a move lower or higher, actually, right? It's just begging to break out of this area. Tomorrow we have a ton of Fed speakers. So it's likely that we'll maybe get the fuel to push up or push down. Importantly, while we're looking at this, right, you can see that below, everything below really 2080 is relatively poorly auctioned, right? Some areas worse than others, but the whole area was relatively poorly auctioned and is therefore open to being re-auctioned again on the downside. Importantly, the first key to showing that sellers truly have any kind of success or any kind of control would be the 50-60 retrace, which right now sits at 2054 to 2044. Now this is what I call a very localized 50-60 retrace. It's just from the most recent swing low to the most recent swing high. And for me, in order to see that sellers are in control, the first thing that I would have to see is that we are trading below the 50-60 retrace. I don't have a drawing tool on this particular recording device that I have, so you'll just have to bear with me using the pointer for finding location, right? So importantly, if we can't get below this 50-60, what I expect to see predominantly are pushes down, followed by responsive buyers back up, right? That's been a theme now that we've had for 2 or 3 weeks, and it has served us very, very well. So let's look at today's price action. Let's go over to today. And a couple things. I noted a couple things. The first thing I said was when we were pushing down towards the low today on ES, I was pointing out that when we were hitting lows here and here, that what I would like to see, and this is going to be becoming really important later in the day, so what I'd like to see is NQ stronger than ES, right? That would be an indication that we could trap and push back to the upside, right? And that also, I said that I didn't feel overly confident in Globex low or Friday's low, that the zone I really wanted, what I really, really wanted for my trade location was 2080 to 2078, right? So if we look as we're coming in here, I want to mark this off. we go. Won't let me move this, so let me see if I can't scroll back just a little bit. Not too much. Wow, that's just totally out of control. Let's try to grab it this way. So this morning, while we were coming into these lows down here, meaning Clubix low, Monday's low, and then towards this 2080, right? Notice that on NQ, during that exact same time period, right? Here's NQ at 9:30 in the morning. Notice that NQ actually is getting closer to its Globex low at 9:30 than ES is. It's the opposite of what we're usually looking for. Remember, we're looking for strength in NQ and weakness in ES, and for NQ to lead us back to the upside, right? Notice now that once we get towards the 11 a.m. hour, that we have finally punched below both Globex low in both markets and below Friday's prior day low. But interesting, notice how that we quickly trap back above Friday's low in ES, and NQ really delays making that move back up, right? We'll also notice on this time frame, right, on the tick divergence. So we missed by a tick. Obviously, we can't always have perfection in the lows. I believe the first time down here we had 243 contracts, maybe less, go off. I was just leaving or had just left as this approached, right? And the other thing I said we were looking for when we pushed into the zones, and you'll forgive me, I'm a little bit tired. I got pretty beat up today. Was tick divergence, right? So if we pull up our tick divergence chart and we look here, so I'm gonna mark it off. Here's where we're hitting lows, right? And we come within a tick of that zone. Here, is where we hit lows of the day on the tick. So notice, at 10:30, we hit the lows between 10 on the tick. Between 10:45 and 11 a.m., we hit the lows in ES, right? One tick in front of the zone with tick divergence, right? And what does that do? That pops us from 2080 all the way up to 2088. Pretty cool, right? Now, I'm not encouraging people or telling people to go outside of the zone to take a trade, but this is exactly what we're looking for to find a low. And the zones aren't always going to be perfect. It's pretty damn close, right, within a tick, but they're not always going to be perfect. And so you are looking for this tick. This is exactly what you're looking for in tick divergence, for those who are looking for it. Tick divergence right in front of the zone. I'm sure some of y'all missed it right at a quarter, right? Now I want to show you a little bit different picture and some other clues that helped us out at the end of the day, get us a rebound back to the upside. Now remember, unless we get below 2080, we're still in balance. And what did I say? I moved the zone to 2078, 2080. Why? That was the edge of balance. That was the best place to take a trade, either at the edge from above, pushing down, which again, I was not bearish on the day, or from the edges for push back to the upside. And hopefully, I was hoping that we could assault that 2094 and then after that to 2100 area, right? So if we come back and we tie the pieces back together, and I'm trying to keep this brief. So look towards the end of the day here. Let me make another push back down on the chart. Minimize that. So look here as we're heading in towards the end of the day. This is market closes right here, right, at 1500. At 1430, NQ's pushing down, but notice we're not pushing lows. But if you'll notice this same time frame over here, right, we've had a nice fat rotation up. 5.5 is a current average rotation. We pushed from 2080 all the way back up to 2088, 2080 and a quarter all the way back up 2088, right? But we haven't completed the auction. We haven't come down and re-auctioned this 2080 to 2078. Look at the market comes all the way down now. This is 1430, even though this is the end of the day, and I don't normally trade at the end of the day, right? The concept from an auction market theory and understanding how the market works still holds. If you got bearish down here and thought we were going to break, All you gotta do is come over here and look at NQ. ES is pushing new lows here at 1430. What's NQ doing? Nowhere close to new lows, right? Do y'all see that? That's what I would call, at least, I'm sure there's a better technical word, but I'm tired, but that's index divergence. NQ's leading, showing strength, pushing down at the end of the day. Again, shorting at the end of the day, I don't think is a great idea. Yes, I know everyone sees this rip down 8 points. I still think it's a low odds affair and very difficult to get consistency out of, right? So we look, see NQ here, see NQ here, and then let's go and look at what the tick was doing at that time of the day. So, sure enough, okay, and just remember tick, just like everything else, right? Tick works sometimes, sometimes it doesn't. I've had markets where it doesn't work, but the majority of the time it does work, especially when you combine it with other supporting factors, like it's actually the first time to complete down into the 2078, 2080 structure, right? So we come down, we make a new low. Again, I'm going to use my drawing tools here. Here's where tick made a new low. Alright, let's get that done again. Here's where ES makes a new low, right here. Clear tick divergence, okay? Clear index divergence. And truly, first time into the zone, someone's going to ask, and it's a pretty natural question, well, it ticks in front of the zone, Simon, isn't that considered, wasn't the zone considered tested the first time in back here at 10:45, 11 a.m. right in front of New York Launch? And my answer to that would be yes, but if you'll look at the second touch of the zone, we had additional supporting evidence. NQ failing to push to new lows, even though it was in sync to new lows over here, right? Failed to push to new lows over here on NQ. Tick divergence, right? And completion of the auction here, and also end of the day. So if you took the 2080, or even if you pushed into the middle zone at 2079, you obviously had 4 points available to you. And if you look after hours, you'll see that we've pushed. We'll open up the chart here real quick. See if I can't get this to. And you'll see we push from our 2080 zone right here all the way back up to 2089, 9-point rotation higher. Why? We're in balance. So the story here is pretty straightforward, right? Obviously I'm on vacay, but the zones were placed in the right location. First touch of the zone, we missed by a tick, right? Gave an 8-point rotation up. Second touch of the zone, tick divergence, divergence between indexes, and a beautiful rotation back to the upside, although it was given in the after hours market, right? Getting bearish in this environment, I understand that it worked from here to here, but most people today, if they were bearish, first of all, remember usually psychologically they get bearish at the lows. They've obviously been bone crushed 2 times, right? Secondly, I've read a lot of bearish articles out there, or see a lot of bearish articles both in Twitter and in StockTwits. The people talking about how we should come down, there's a divergence in the bonds, all kinds of black magic that people are talking about. And for me, it was pretty clear. We had to get out of balance. It's usually accompanied by a gap, which we did not have, right? And people then want to get emotional about the market pulling down or going up for that matter, right? My philosophy is wait for the break. Once you get a break, wait for a if you want to short, wait for the break, wait for a significant rotation higher, and start shorting after the break once you get a clear and direct entry, right? But there's no need to take a stand or make a determination that, hey, this is what has to happen. That's how you get smoked in trading. If you waited patiently today, you had 2 really clean entries near the lows, right? And you had tick divergence, everything you wanted, and they gave you 2 given outside of the trading hours, but it ended up being 2 over 8-point rotations up out of the lows, and I think that's really, really valuable. Even if I didn't catch either trade, I gain a lot of confidence in my trading knowing that my perspective was correct from the get-go. Obviously, I wasn't here to trade it, so particularly in the afternoon, right? I had a small window to trade today because I'm on vacation, but um, I gained confidence from knowing that the look that I had and what I was looking for in the market, that was highly effective. So going towards tomorrow, right? It's pretty much a replay of today's trade plan. First of all, I'm looking for what's been a consistent theme of divergence between NQ and ES when ES is sitting new lows, right? Are we gapping up or are we gapping down? If we're gapping down, are we gapping below that 2080? Or are we open drive low? Let's say we gap down to 2083 and then open drive lower and establish a push below that 2080 with an inability to get back above. First clue that sellers really have control. Right now, I usually miss the first series of rollovers to the downside because usually, as I've shown repeatedly, the pushes down are very brief. They last for 2 or 3 days and then we get big pushes back to the upside, and I don't see anything bearish yet, so I'm going to wait for that break and that push back up, or to have a clear intraday signal that, hey, I need a short, i.e. 10-point rotation up, tick divergence into a critical level, something like that to let me get bearish. Until then, I'm going to defend myself psychologically against getting bearish because it's just not simply paying any money. I don't see the reward, and I'm not a swing trader, and I don't manage a couple of $1 billion. I don't have to predict what the market's going to do. I can react to what the market's going to do with a disciplined and focused approach. Okay, so next point, when we if we get above 2094.50, that was last week's high, right? So if we gap above, first thing I want to know is, can we sustain above today's high, 2090 to 2092? And same thing on NQ. I would like NQ to be leading and trading above Monday's high, and preferably above last week's high to make an assault on the year-to-date high. I believe if we can get above 2094.50, that we can assault the 2097 to 2099, 2102, 2104, 2108, 2110, and then eventually up to the 2117. That there's plenty of stops sitting back here, and that people may just be a little too confident that we're going to roll over, and that would be a great opportunity to clear those stops out, right? So gap up, open drive higher. Obviously, I'm going to want to make sure that there's some counter rotations, and if I'm taking shorts in these zones, if that's in my trade plan, I'm going to want to see it work relatively quickly, or I'm going to be quick to cover the trade. I'm not interested in being a hero at the highs, trying to predict a rollover, right? Conversely, on the downside, because buyers are in overall control, I do expect a continued rotation like we had today, and I'm going to go back to that again really quickly. Here we go. See this pattern here? This is played out over and over and over. This exact pattern, right? We're getting rotations back up, 8-point rotation back up, 10-point rotation back up. This pattern is played out repeatedly for weeks and I think months now, I can say confidently. And my suggestion is to focus on the long side of the trade, particularly if you're not, we're all aggressive if we're trading futures, but if you're not the most extreme aggression, I know the shorts look nice on paper, but the actual execution and proper execution of them, it actually turns out to be difficult in terms of achieving consistency. And if you just focus on looking for tick divergence combined with perhaps index divergence and getting your trade at key locations, which again, the zones are providing us those key locations. If you can do that, then I believe you have an opportunity to have some really beautiful trades, make some really good money to the long side. So that's my 2 cents. I will post a link to the room in the morning, but again, I do not believe I'll be able to get back in time. It'll probably be later in the day, closer to 10 a.m. before I'm able to get back into the room tomorrow morning. And that's 10 a.m. Central Time. So anyways, I hope everyone had a wonderful day. I think there was 2 good opportunities today for alongside trades, and that played out very, very nicely. So same plan for tomorrow. Again, key critical areas based on where we closed here, this 2082, if we can get down anywhere in this 2058 to 2061, 2052 to 2054, right, or this 2049.50, this open gap, I expect strong responsive buyers out of this area for a push back to the upside out of this area. So that would be my expectation for the day. And again, first touch of the zones, initial target is 6 to 8 ticks above after first touch of the zones, and reasonable stop, I use 2 points behind the back of the zone in most situations. And at the open gap, I usually use a 8-point stop and a half size trade, right? So again, what's most important here for your success is that you follow a consistent trading plan with consistent focus and consistent execution, so that you can see where things are going right, where things are going wrong. Doesn't matter how I trade. What matters is what can you execute emotionally, well, I guess emotional trading IQ, intellectual trading IQ, and discipline IQ, I guess is what I would define those as, is what can you do consistently. And the fact of the matter is a lot of guys just can't stand or wait to get that 1 or 2 trades a day, and most of those guys end up squandering their money away. But the best traders do wait till they have prime location, everything line up at the same time perfectly for them, and then they tend to nail it. So, and they tend to, those guys, the ones who are patient and know where they want to trade ahead of time, tend to make a lot of money in the futures markets. So anyways, I'm tired. I went a little bit longer than I normally do because I wanted everyone to be clear on what my plan was. Again, my focus on the long side, tick divergence. It's helpful certainly when I see divergence between NQ and ES, where NQ is leading the divergence back to the upside. I really want to jump on top of that in ES. And again, until we break out of that balance that we're in between 2080 and 2094, patience is required. And I would be hesitant above 2094.25 to stick a short for a very long period of time, if at all. And instead would look for rotations lower for pushes back to the upside. That would be my general trade plan. So anyways, guys, have a great night, and I will see you all sometime tomorrow, and talk to you soon.